Ladies and gentlemen, welcome back to the channel. If you are new here, what we do on this channel is find under the radar stocks that Wall Street is ignoring or doesn't understand the opportunity, and we strive to be early to those investments, and I make videos going over those. We have another one for you today. Ticker symbol DFLI, Dragonfly Energy is the name of the company. Now, I want to tell you, this one is different from Resolve AI. This one is different from Nebius Group, some of the other ones that we've talked about on this channel over the past 6 months or so. This one's a little different. This one's not necessarily an AI company, but it's in the second hottest sector besides AI, and that is energy. The stock was up over 78% today, up another 27% in after hours. In this video, I will share what the company is, what they're doing, what their financials look like, what their last earnings look like, the biggest risk for this company if you did decide to invest in the stock. Again, we will look at the option activity, the institutional investors, give you a broad-based rundown, and as well as that, go over my thoughts and expectations for this company. Do me a quick favor, hit the like button as well as subscribe to the channel. Check out that link down below in the description of this video if you want to come join the trading community and get notified when I make trades, when I sell out, when I buy more, when I'm hedging, all of that, and come join over 200 like-minded investors. Link down below in the description of this video. It's actually funny. This stock is $1.36 right now. But other members in the trading group were buying this thing in the 30 to 50 cent range. So, you know, even sometimes I'm a little bit late to some of the opportunities. So shout out to Talon, shout out to, Vince, some of you guys that were really early on this one. I believe Nono was in that, and these are members in the group. Shout out to you guys. But with that said, let's get started with what is Dragonfly Energy. Okay, so this is Dragonfly Energy's website here. They say beyond batteries, redefining power and possibilities. 10 years of research and development, 400,000 plus life PO4 battery packs sold, and over 100 granted, filed, and pending patents. They are pioneering innovation in North America's lithium battery landscape through cutting-edge cell manufacturing processes, advancing battery pack design and full system integration. So cell manufacturing, technology innovation, system integration, and battery pack design and assembly. So you could see why this company, should be doing well. Now, they haven't been doing well, and we'll talk about why in just a moment. But it says here, domestic dry electrode battery manufacturing, a proprietary and patented approach to lithium cell production. 22% smaller factory area requirements, 25% less energy intense production process, 9% reduced carbon footprint for total cell manufacturing, and a lower process related cost. So they make stationary batteries like this. They also make the, battery cells like you'd imagine that go in electric vehicles. Okay. So it says here, recreational vehicles, elevating adventures with reliable power solutions tailored for life on the road and off the grid. Medium and heavy duty trucking. Lithium power helping medium and heavy duty trucking fleets save money, reduce environmental impact, and improve efficiency. Industrial solar integration, driving sustainable energy solutions for industrial applications, maximizing efficiency and reliability. Off-grid residential, like energy independence with off-grid residential power solutions, providing reliable and sustainable electricity for homes. Marine, so they're optimizing performance, reliability, and longevity for on-the-water power solutions. Work trucks, enhancing productivity and efficiency on the job with integrated power systems tailored to business needs. Industrial equipment, reducing downtime and improving performance with power solutions for industrial operations. And backup power, ensuring reliable, uninterrupted backup power for off-grid applications. So this company is into quite a bit. Okay, but battery cells, battery technology, that's what the company is about. That's what they're doing. Now, Recently, you can see this press release here. It says Dragonfly Energy showcases technological leadership at the Battery Show North America 2025. They had their presentation. They showed people, what they're doing. It says, quote, "Our focus has always been on advancing the dialogue around energy storage and manufacturing innovation," said Dr. Denise Fars, Chief Executive Officer of Dragonfly Energy. "The Battery Show offers an important forum to exchange ideas, highlight technical progress, and collaborate on the solutions needed to strengthen the industry as a whole." Okay, so that news was a couple of days ago. The news today that sent the stock higher was this. Well, not this. Let's go back to here. Okay, let's pull up the presser. It says Dragonfly Energy to be awarded Nevada Tech Hub funding to advance battery manufacturing and workforce development. So it says Nevada Tech Hub selects Dragonfly Energy for first round funding with contract finalization in progress. Funding to support manufacturing upgrades that are expected to improve efficiency and reduce cost. Project to expand Nevada's skilled battery workforce through new training and hiring initiatives. So this was a $300,000 grant, and it will be applied towards high impact modernization and workforce development initiatives. Okay, so this is basically free money, a grant that they are getting. It says they are supporting industry leaders like Dragonfly Energy is central to Nevada's Tech Hub's mission. So that was the news today. Okay, that's what sent the stock up 70-ish%. But why was this stock doing so poorly before? I mean, just not too long ago, the stock hit a low of 15 cents a share in July of 2025. It then rallied to 67 cents, back down into the 20-cent range. And recently, within the last week or so, it started to do much better. Now, keep in mind, back in January of 2025, to start this year, the stock was as high as $3.90. It really had a fall from grace. Okay. I think it has to do with Wall Street not really understanding or being a part of this company. And we'll get into the exact reasons for that. I'll show what the analyst targets are and all of that. I think this is one that's really flying under the radar when it comes to the energy market. Okay, a lot of high-flying energy stocks are doing quite well. This one is not. The big reason for this, the number one reason and risk with Dragonfly is their balance sheet and their loss. So as of the second quarter of 2025, Dragonfly Energy Holdings, DFLI, reported total assets of $71.77 million and total liabilities of $87.13 million. If you look at the cash, though, okay, that's where things look a little bit worse, okay? Here. So Dragonfly Energy Holdings reports Q2 loss tops revenue estimates. So they came out with quarterly loss of 58 cents per share versus the estimate of a loss of $1.29 a share. That compares to a loss of $1.98 a share a year ago. So yeah, the company did a lot better than expected. And I think that's why Wall Street just said, okay, well, this one's destined for bankruptcy. Okay. I think Wall Street's being a little bit too negative on this one. Even after the rally, it doesn't look as bleak as, Wall Street is suggesting by the collapse in the stock in the last 6 months. It says here, it will be interesting to see how estimates for the coming quarters and the current fiscal year change in the days ahead. The current consensus EPS estimate is a negative $1.06 on $17.71 million in revenues for the coming quarter and negative $4.10 on $65.88 million in revenues for the current fiscal year. So this company this year is going to do $65.88 million. You're going to laugh when you see what the market cap is of this company. Less than $65 million. They're trading at less than or right around 1x sales, which, you know, energy companies, they're going to trade not like a tech company, but more than 1x sales. So it says here, green and renewable energy trades typically around 2.38x sales. Power trades around 2.5x sales. Utilities, renewables around 3.16 times sales. The price to sales ratio for the S&P is approximately 3.36. So it is undervalued just relative to, you know, what you'd expect to see, because I think Wall Street is nervous about the future prospects of the company. And I think it's a little overblown. Now, the company's Q3 earnings are confirmed for Thursday, November 13th, 2025. So a little over a month from now, we will get earnings. Now, analysts forecast 25% sales growth this year and annual revenue. It says here $54.5 million, but the company is projecting more than that. It says Dragonfly Energy faces significant financial challenges, including a substantial debt burden of $64 million. It says here they only have $2.73 million in cash. So I seen somewhere, I can't find it now, but the company lost about $7 million in the last quarter. So the cash picture today just doesn't look great. Now, that could change. One partnership, one deal, one infusion of capital could change things. Now, I think the company's also in a weird position because they've been under $1 per share now for at least, you know, since April. So the last, 6 months? They have to stay above $1 per share for at least 2 weeks out of 52 weeks to stay listed on markets. Company doesn't want to get delisted. So the biggest risk from a investing perspective in this company is they're going to raise capital at some point. Okay, maybe not. Maybe there's a different way that they can raise capital, but at some point they're going to raise capital. Now it says here the company's gross margin improved by 430 basis points in the last quarter to 28.3%, benefiting from lower inventory cost and improved fixed cost absorption. Despite reporting a net loss of $7 million, okay, that's where I read that. This represents an improvement from the $13.6 million loss in Q2 2025. So things are moving in the right direction, that's for sure, but there's still that loss that they are incurring. And that's why the stock has been so beat down. You wanted to take a longer term investment into the company. It is risky, right? It is clearly risky when you're in a dicey financial situation like that. But the company is trading at a discount to reflect that versus its peers. I mean, it's growing at 25%. It's in the baby stages. Could be an acquisition target. You know, I see it at this point, just to put it like this. Even at $1.33, the biggest risk is dilution. But I think there is a substantial underappreciation if the company can somehow manage to get their financials in the right place. Everything else is moving in the right direction. Margins, revenue, growth, moving in the right direction. They just need to figure out that cash situation. Now, are they going to dilute before or after earnings on November 13th? I have no idea. And if you buy this stock, you need to come to your own conclusions on this. And really, speculative companies like this, you should never put more money in a stock that you are not willing to lose. Like, would I put $100,000 in Dragonfly? No, absolutely not. Would I put $1,000 because I don't care if I lose $1,000 and if it goes up 10x, great? Sure, maybe. And I will share my position in just a few moments. But really, I mean, depending on what kind of market we go in, Energy is hot right now. From a trade perspective, if they just as is, you could see the stock probably going to the $2 or $3 range again. If they could fix their financial situation, the stock could go much higher than that, right? Anything is possible. But if we get dilution, if we get bad news, the stock's going to fall at least like 50%. Now, maybe dilution in the case of Dragonfly could be seen as a positive, a small capital raise just to like give them cash to survive. You know, sometimes that happens. Sometimes a company can raise capital and they just had to do it. And Wall Street's like, that's great. That's great news. Now they got cash to survive. A 50% drop from here. Well, not technically from here. The stock is $1.33. So, you know, 50% drop from here puts the stock back at about 66 cents per share. So like, you need to be prepared for that if they raise capital, right? But this is technically now the highest level you've seen on the stock since back here in March of 2025, right before a nasty decline here on March 3rd of 2025. So you're kind of at a breakout level. If you can continue that upside momentum, it could get even a little crazier. Now, let's take a look at the what the institutions are doing, what the short position looks like in the company. So 11% short interest of free float. Back in July, it said it was at 124% short interest of free float. So there's definitely still a short interest in the company, but it's a lot lower than it was before. Now, today, you had about 870,000 shares that were covered on from at least Ortex's estimates here. Utilization at about 90%, so there's not a lot of shares that are freely trading out there with a short score of 71. So definitely a little bit of a short squeeze is could be happening. Now, as far as ownership, Dennis Farr's here, insider in the company, owns 3% of the shares. Heights Capital Management owns 6%. And then other firms own some as well. But it's not a very well-known company by Wall Street. Again, the size of the company is very small, and a lot of firms can't even invest in super small companies. Like before this rally today, the market cap was $37 million, right? It's a very small company. And when there's small companies like that, it can take a while for Wall Street to catch on or invest in the company at all, okay? Now, there's one analyst that covers the company dating back to November 14th, 2024. They had a $1.25 price target on the stock and rated the stock a strong buy. That was Canaccord Genuity. Well, fast forward almost a year, and Canaccord Genuity is still the only analyst firm that covers the company. They did raise their price target, though, on May 15th, 2025 to a strong buy at $1.50. So take that for what you will. There's just not a lot of analyst coverage, which could be an upside. If the stock does start to do very well, maybe, just maybe, you could see more analysts start to cover it, and that could be exciting. But again, the biggest risk in the near term is dilution, right? The question I personally have is, do we get that dilution before or after earnings? Eventually, it's coming. Just keep that in mind. Now, here's my position in the stock for full transparency's sake. Again, I only put like 2 or 3% of my portfolio into this. Like, it's not a big part of my portfolio, okay? Average cost, 84.5 cents. I bought 5,000 shares. Current market value, $6,500. I'm up 54% on the stock. But I am making this video because I think there is still substantial opportunities in the stock if they can just figure out how to raise capital in the least dilutive way possible, right? That's why the stock went up 75% today, because they got $300,000 and did not have to raise capital. It was a grant, okay? If we could see the company just figure out how to get more cash without substantial dilution, then that would be game changer for the company, to say the least, because everything else is moving in the right direction. They're just cash does not look, it's not great, right? So yeah, that's kind of my thoughts around the company. That's what's happening. Again, be very careful. I'm not a financial advisor. I'm not a financial planner. In fact, maybe this video argues to not invest in the company or not invest too much in the company because, I mean, it is in a very precarious situation, but it's one of those high risk, high reward kind of things. If the company can figure it out, the stock is going much higher like it was, 6, 7, 8, 9, 10 months ago, right? Stock back in 2024 was a $5, $6 stock. If they could just figure that cash equation out, that's money. If they can't, then that gets really, really bad quickly. So let me know your thoughts on this down below in the comment section. That is it. Have a great rest of your day. If you guys want to come join us, check that link out down below in the description of today's episode. Have a good one, and I will see you in the next one.